Welcome to this video. In this video, I'm going to be making a stock analysis of Nektar Therapeutics. So if you like this video, please don't forget to leave a like and subscribe. And of course, remember this isn't financial advice, it's purely for entertainment and educational purposes. Now, as you can see for the day, we are up quite a lot by 22.29%. And why is that? Well, that is because their lead dermatologic medicine has just passed their phase 2B trials, which means soon enough, chances are they're going to go to phase 3, which is going to be quite incredible. Now, let's take a look at the stock overall. As you can see, ever since May, it has had quite a tumble. As you can see, all until now, where it rose quite a bit. Now, let's take a look at the stock in a broader picture. As you can see, if we make every candle day, it's not a pretty picture as was before. As you can see, back in 2018, it was quite high, and it has fallen quite a lot ever since. That is also the reason why we see this reverse stock split right here, where if you had 15 stocks, it would then be turned into one. And reverse stock splits is never a great thing to happen, and 9 out of 10 times they always happen because their stock price isn't high enough for them to be on the Nasdaq or for other financial reasons. However, with that being said, as you can see, the RSI recently haven't been that great either. As you can see, we've been trading quite a lot down here in the lower channel, a bit in the upper channel, but primarily down here. Now, what is RSI? That is the relative strength index. So something that's between 70 and 50, it's trading upwards. As you can see here, it's trading upwards, and we are here. Or today, we're above 70. Here it's overbought. As you can see, it rises quite insanely. But if it's between 50 and 30, it's in the lower channel, it's getting sold. And if it's below 30, it's oversold, as you can see here, where it drops quite rapidly. So currently we're up quite high in the RSI. Now this doesn't mean that it couldn't go higher because it is relative to the price that came before it. So it could rise even more, but chances are this is going to fall. As you can see, it is already going a bit down. And we're trading, as you can see, all the way up here in 95 RSI, which is absolutely insane. Now, as you can see, the beta on this stock is quite high, which means that this moves 285% of the index it is in, which means it is 2.85 times more volatile than the Nasdaq. Now, the trailing 12-month EPS or earnings per share is quite poor as well. As you can see, estimate on the last 12 months earnings per share is minus $9.52, so they're losing money. And the trailing 12 months price to earnings isn't even available because it just simply isn't either it isn't worth that much or it is too volatile, which both would make quite a lot of sense as it is quite volatile given the beta. Now the earnings per share here, as you can see, that is also minus. Now as you can see, it is higher than the average 12 month. As you can see, it is minus 9.5, but as you can see, these are only minus, what is that estimate, 2.7, and as you can see, the estimate again by 2.9. Of course, the estimates is not what actually happened, but that is what they're expecting, and just that they are so much higher than the 12 months trailing is quite good to see. But as you can see, two times here we miss them by 40% and by 35%, which is quite poor. We then beat it by 9.5% and by 122%. So sometimes they do it quite nicely. So, but of course, they don't make any money yet, so be careful in a stock like this. And of course, they don't pay out dividends because they don't make any true money. And you can see that down here in the financial as well. And they only make money on novel drug candidates. And this says drug candidates, which means it isn't pure drugs yet because they're not being allowed to be sold yet because they haven't done all the clinical studies yet. And as you can see, it is primarily in the rest of the world that these are being done. Why that is when it's a United States company, I don't know, but I find it quite interesting, to be honest, and we don't see that often. So maybe that is because their focus is elsewhere, because chances are they might have a better chance of succeeding outside of the United States. Now, the performance of this stock, as you can see, for the year, it's quite crazy. Last year as well was quite great. But then if we go all the way back to 2010, as you can see here, we have some years, 2017, with up by 370%, but then as you can see down here, we have quite a lot of years with quite poor performances below minus 55, minus 42, minus 36. So overall, as you can see, it's quite a big coin flip stock. So if you believe them, it would be a great buy. If you don't, I would stay away from it. So it is if you believe them. And a lot of things that they're in is autoimmune disease or some dermatologic, which is skin diseases. So that is the niche that they're in. Now, technicals for this stock for the day is a strong buy, of course, and as you see, currently it is up again 21%, so quite a lot. And for the month, it is neutral. And why is that? Well, that is of course because it was falling quite a bit, and also has been for the past month. So as you can see, now this huge one is just the reason it is neutral. But if we're going to see it maybe take a bit of a bottom position or calm down a bit, if it starts trading like this, or it's going to trade sideways, or maybe a bit downwards or a bit upwards, we are going to see some better technicals, and the technicals could say it's going to be a buy again. And we also have the golden cross today, of course, and that is when the 50-day moving average is higher than the 200-day moving average, which is the green line here crosses the yellow line, which means the 50 days is higher than the 200 days average price. Now, the analyst reading on this is quite amazing, to be honest, as you can see here. 6 strong buy, 1 hold, and 1 strong sell. With the max being up at $120, the average is up by 200%, and the minimum is up by 6%. I do think that is a bit too crazy, if you ask me. But what do I know? I just think it's a bit high valuated, but maybe it would be a great thing to get in. I mean, if you take today into consideration, maybe it's gonna go up a lot tomorrow as well. But overall, I don't like this stock that much, so I'm gonna stay out of it personally. And as you can see in the EPS, they don't expect to make any money per share until at least after 2028. And their annual revenue, as you can see, it really isn't that great either. But a lot of companies like this that develop drugs, of course, they are trading up quite highly because it takes quite a while to make drugs. But then once it's done and they are going to be making money, and the chances are it's gonna rise incredibly fast, and they're going to make quite a lot of money quite fast. We of course do not know this. That was my analysis of Nektar Therapeutics. If you like this video, please don't forget to leave a like and subscribe. And of course, if you want to see any other analyses on other companies, please leave those companies in the comment section below.